Hello there. Welcome back to Grade 10 Accounting. In this video, we want to look at the preparation of the balance sheet. And we know that the balance sheet is part of the financial statements. So we are going to go through the question and answer the question. So the question is from a past exam paper, and it has got 30 marks. So if we go through the question, you would see that it's question 5 on that question paper. Right. The question reads: we are provided with the post-close trial balance and additional information regarding Livingstone suppliers for the financial year ended 28 February 2017. On the required part, 5.1, prepare the balance sheet of Livingstone suppliers at 28 February 2017. Show calculations in brackets to end part marks. Very important here. You have to show the calculations in brackets. Remember, the final calculation that is leading you to the answer is the one that you should just summarize in brackets. So to show the marker that you know how did you arrive at the final answer, right? On the information part, that you're given some balances in the form of a post-closing trial balance as at 28 February 2017. Then we have got our balance sheet account section, so you can just try to scroll down and see your balances before you answer the question. And then obviously you can now go to the next page to see what do we have in terms of this question. So you see that our question now, we have got additional information where we only have 2 additional informations, whereby we've got additional information 1 and additional information 2. So you can go through the additional information so that when you're going through the balance sheet, you know where to adjust. Part 1 is saying part of the fixed deposit at AB Bank matures on the 30 June 2017, which is 25,000. So what does it mean? It means the fixed deposit that we have, we are going to subtract 25,000 since it's going to mature in the on 30 June 2017, which means in the near future. So we are going to subtract it from the total that we have a fixed deposit, and then we include it under cash and cash equivalent. So this is what we have. And then next we've got 100,800 rands will be paid back on the loan from SA Bank in the next financial year. The loan is capitalized. So what does it mean? It means this 100,800 is going to be the current portion of loan. So it means we're going to subtract it from the figure of loan, and then we transfer it under current liabilities as current portion of loan. As simple as that. So our question has got 40 marks. So we know where to make the adjustments now. Then we can go back to the question. So if you go to our answer section, let's just try to go through our answer section where we are given where to fill in the answer book. So you'll see that this is going to be our balance sheet. This is our balance sheet, and we've got our fixed tangible assets being pre-entered as 947,180. And then we are now going to the financial assets. So on the financial assets, we can go to the question and try to see what do we have in terms of the financial assets. We can go to the question. Right, we go down and try to check the financial assets that we have. Remember, the financial assets is described by the fixed deposit. So we can check where we have the fixed deposit. So you see that fixed deposit, we are having it here. So fixed deposit describes the financial assets. So we have 60,000. But remember, we have got an additional information that is explaining the issue of part of the fixed deposit maturing in the next financial year. So we have got 25,000, part of fixed deposit at AB Bank matures on 30 June 2017, which is 25,000. Then 30 June, let's just check where the year is ending. Let's just check where the year is ending. The year is ending on 28 February 2017. And this one is maturing 30 June 2017, which means it's less than a year. So it's going to be a current asset. So we are going to subtract 25,000 from 60,000 of fixed deposit, and then we'll get the net financial, the net amount of fixed deposit. So here, we are coming here and say our fixed deposit, remember, is 60,000. So 60,000 minus 25,000. So we got there. So on our financial assets, we are saying 60,000. And then we subtract our 25,000. And then the amount that we are going to get there is 35,000. So here we have 35,000. Then we can now add 947,180 plus 35,000 to get your total non-current assets, which is 982,180. Then we go to current assets. For current assets now, let's try to see what current assets do we have. We can just go there. We can start from the where we are having our balance section from capital going down, searching for current assets. And we know that current assets, they are resources of a business that are going to stay in the business for a period of a maximum of 1 year. So we go down. We are seeing we have got trading stock, which is 72,400. But obviously we can have various stocks that we can have at the end of the period that we need to add together. So we search for another inventory that we are having or a stock that we are having. We go down. We see that we have got consumable stores on hand. It's part of stock. So we're supposed to add it to 72,400 plus 2,820. Then I will go down again. We go down searching for any other. We see that we don't have. So we are just going to say the one that we are given for trading stock, which is 72,400. And then we add our 2,820 to get the total for inventories. So we go there. So here we are saying inventory. We are saying inventory. And then we are saying the figure that we are given 72,400 in the list. Plus again, for consumable stores are 2,820. We add the two, we are going to get 75,220. And obviously we go again and check in other. After that, we check what do we have. After inventory, we go down, we have our inventory, go down, we've got debtors control. So debtors control is part of trade and other receivables. So we are going to say debtors control, 14,800. We check for other receivables, we go down, checking for other receivables. We would accrued income is a receivable. We add accrued income 3,400. And then we add, we see another, if you have got a prepayment of expenses, we have it here, which is 3,900. So we are saying 3,900 plus 3,400 plus 14,800 is traded other receivables. So we go there and summarize as such. So here we are saying trade and other receivables, whereby we are saying 40,800. We add 3,400. We add 3,900. And then the answer that we are going to get there, 22,100. So this is what we have, and then we check what we have next. After debtors control, we have bank. Remember, bank is part of cash and cash equivalents. So for cash and cash equivalents, we have got bank 34,100. We also have petty cash 2,500. We also have cash float 1,000. And remember, we have that amount that was of fixed deposit that is going to mature in the next financial year, which we said is going to be a current asset. It's part of cash and cash equivalent. This one, the statement is saying part of the fixed deposit at AB Bank matures on 3rd June 2017, and said we are going to transfer to current assets. It goes under cash and cash equivalent. So then we add again 25,000. So basically, we are saying 25,000 plus the figure for bank, 34,100 plus the figure for petty cash, 2,100 plus the figure for cash float, 1,000. And then we get our figure for cash and cash equivalents. So we are saying cash and cash equivalents are, remember, we are saying we are having 34,100. We add 2,500. We add 1,000. We add 1,000. And lastly, we are adding 25,000. That is part of the fixed deposit. Then the total that we are going to get, we put it here, which is 62,600. So you can now find the total of current assets by saying 62,600 plus 22,100 plus 75,220. And we are going to get your 159,920. Then for total assets, here we are saying non-current assets plus current assets. Basically, we are saying 90, then 90, we have 982,180 plus 159,920. Then we get your total assets, which is 1,142,100. So this is what we have. And then this is going to be the first balancing figure. So we can just check it out. Remember that our accounting equation, remember our balance sheet comply with the accounting equation, which say assets is equals to equity plus liabilities. So this is the case that we have. So we've found the total for assets. Now we want to find the total for equity plus liabilities. Then we can this total should be the same with the total for assets. So this is what we have. And then we go to equity and liabilities. We are given it is this is 630. 630,800. So what it means is here we have got non-current liabilities, and then we have got current liabilities. So it means this figure that we have is for equity only. So we can just remove our liabilities here. Which means this is a mistake. Then what we're going to do now, we are going to the non-current liability section. We have got loan. But remember what we had in additional information, that part of the loan is going to be repaid in the next financial year. So we're going to transfer it to become current portion of loan. So the figure for loan that we have, let's try to see. Loan, we have it here, which is 440,000. And then we are going to subtract that figure. That is going to be current portion of loan, which is, let's just try to see. The figure that we have for current portion of loan. 100,000 rands, 800 will be paid back on the loan from SA Bank in the next financial year. And we said this 100,800 will be transferred to become current portion of loan. So we are going to subtract it from the figure of loan, which is 440,000. So we just go there. So here we are saying for non-current liabilities, we are saying loan. Then in brackets, we are saying 440,000 for the loan that we are given. In the trial balance, we subtract the one that is the current portion of loan. And then we get 339,200, which is the same figure which is going to come here as our non-current liabilities. Then I will go to current liabilities. We're going to check, obviously, we have trade and other payables, where we are going to start with the creditors control figure. Creditors control figure is 48,900. Trade and other payables. So other payables, we check there. Other payables that we can have, we have got accruals of expenses, it's a payable, and prepayments of income. If they are there, we check. We go there and try to see. Accrued expense, we have it, 4,100. So we're adding this one plus our creditors control figure. And then we add also, if we can check for prepayment of income, if we have it. Prepayment of income, we can just try to see. We also have creditors for salaries, 12,300. It's also part of payables, creditors for salaries, which is 12,300. And also we've got income received in advance. This is a prepayment of an income. It's also a payable. So what we are saying is we've got 12,300 plus 6,000 plus 4,100 plus the figure for creditors control, 48,900. Then we get to total for trade and other payables. So we come here. Right, we are here. So we are saying trade and other payables. So here we are saying trade. Trade and other payables. So basically we are saying we are adding 48,900. So we can say 48,900 and then we add 4,100. Then we add 6,000. Then we add 4,300. And then the total that we are supposed to get there, 71,300. And also we've got the current portion of loan. Current portion of loan, remember, we've got this 100,800 that we said we should be part of current portion of loan, 100,800. And this is what we have. So we can now add the two to get the total for current liabilities, 71,300 plus 100,800. Then to get 172. Let's try to see 172,100. Then to get the total for total equity and liabilities. Total equity and liabilities, we are going to say the equity total plus the non-current liabilities total plus the current liabilities total. Then we get this total. So basically, we are saying the figures are here. We are adding this one, 630,800 plus 339,200 plus 172,100 less. So the answer that we are supposed to get here is 1,142,100. So this is the second balancing figure, which we see being equal to the figure for total assets. So we see that the total for equity and liabilities, this one is equal to the total that we have for assets. So this is the fulfillment of the accounting question, which says assets is equal to equity plus liabilities. So this is what we have, guys, according to this video on the preparation of one of the financial statements, which is the balance sheet. So let's stay tuned for more videos to come. Those who haven't subscribed, please subscribe and share. Let's share the link to those who are interested. And we meet again in the next video. But as for this video, I'm signing out.